Good afternoon, everybody. Let's do it. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Just give me 1 second here on this disclosure. I just want to fix something with the VTF. Cool. Position disclosure here. Yeah, this is the last disclosure from public afternoon meeting. Started to buy back stock, really just buy back stock a little bit, and Google, Amazon, Snap, a little bit of Shop also. So those are technically new positions there. I got out of Blue Apron today. Traded Netflix today, but didn't keep any of it. I traded IWM today, but didn't keep any of it. But I don't know. It's a big down day, but it was like kind of a boring day. Let's take a look. Yes, first of all, I saw the small time frame here up. Switch to the big time frame. But you can see just a very grindy day. I want to talk about this opening price action, but let's start on the big picture. SPYs here, the S&P closing down a whopping 2%. Q's down 2.5%. IWM down 2% as well. It's pretty down day, pretty big down day on a percentage basis. But again, it didn't. It was like kind of very slow and boring and orderly. Most of the down move happened via the gap. And then we had a little bit of downside grindy price action. So, coming into today, look, we've been expecting this pullback. We've been talking about this pullback. We've been expecting this pullback. And like I've said on a number of occasions recently here, as we kind of wrap this little top, I think that the first major pullback that we get, the first major 3 to 5% pullback that we get from this market is going to be the real test on what type of rally this was. It looks like the data points to that it's primarily a bear market rally. It's primarily a short covering rally. The question really is we know that funds are still relatively underpositioned to the long side. Do buyers actually come back into this market on a down wave or not? Or is it just going to be a repeat of the last major bear market rally that we saw back in March that I always like to point to? This was a great rally, as was this rally here second half of July and August. We know that in some of the biggest up moves and biggest up days in the history of the market actually tend to occur in bear markets. That's why bear market rallies can be so brutal and so vicious. So is that it? Are we just going to now repeat what we saw in like April and May and just totally fail and eventually make new lows in this market? Or are buyers going to come back in and take a stand and maybe actual long buyers come into this market? It's to be determined. But so far, we correctly called for and looked for this pullback here in the market. And the question is, where are we going to bounce? Where are they going to attempt to bounce us? Even if we do kind of go back into a bear market, even if we do kind of go into this like April and May action, just remember there was a lot of grind in certain periods here. There was also some fast moves. Remember this breakout failure on April 21st that led to like a real big two down days in a row, followed by a little oversold bounce, followed by a third down day. Right, there was some decent movements in here, but overall it was to the downside. But even within that, you had your kind of bounce days. So what I'm not expecting, even in a world where we're going all the way back to SPY 370, I'm not expecting it to look like this, like what we saw in June when the May CPI number was followed by a Fed meeting and they just obliterated this market. This is like some of the worst, like 3 days, like if you're choosing like a 3-day period, this might be like outside of COVID, the worst 3-day period I've ever seen in markets in my entire career. That's not what I'm expecting, but it almost looks like it right now, right? I titled this meeting in YouTube, so I got to give like a title to all of it. 2 down days and 3 supports later, because we had identified that there's some support at 322.50. We identified that there's some support at 320. We identified that there's some support at 315. We identified some support that there's at 410. Am I saying threes? I mean fours. 422.50, 420, 415, 410, and we broke 3 of those support levels in 2 days. I had been calling for pull back into the 415 to 420 area. 415 was really a spot that I expected the buyers to take a stand on, and they didn't. They didn't at all. And I think that 410 is like a do or die support level, because that's kind of where our last major pivot of this uptrend is. So if you just go straight down and break 410 on a closing basis, well, that ends the uptrend. It doesn't necessarily make it a downtrend. Right now, we are not in a new downtrend on the small time frame, at least not yet. It's just been straight down, and it's just technically a retracement so far because we haven't broken that last pivot. But bulls cannot afford to lose this 410 on a closing basis. I think that's a major line in the sand. But I am a little bit surprised at the degree of the pullback today. The buyers didn't even attempt to hold 415. And I'm surprised by the lack of volatility. And I know Pat made a comment about it. I made a comment about it earlier today as well. On the one hand, it's like, all right, it's the end of August. This is usually when things get real slow. Like the back half of August and like the first 1 to 2 weeks of September are like some of the slowest periods of the year. People are traveling, people are on vacation. I'm going to be going away soon, though I'm doing it a little bit later. So it's not unusual to see, the price action be kind of slow. It's just within the confines of a gap down that was as big as it was today for the price action to be so slow. That's the surprise. We gap down, solid percent plus, depending on which index that you're looking at. This was a real big gap down. Whenever we're having these really big gaps, particularly to the downside, I always want to see where that opening low comes in. Usually, you get an opening low in the first 15 to 30 minutes. And on these types of days, it's very key. Like, usually, here's a couple of different situations that are typical on a big gap down that you might see. You might see some opening panic selling, scenario number 1. You might see some opening panic selling because of people who are out of the money from the gap freaking out and getting out of their positions. When that happens, a lot of times you see a very quick down move that lasts, usually like 10 to 25 minutes, 25 minutes if it's real bad. And then you get a market that's already extended because of the gap down, getting more and more and more extended because of the panic selling. And then almost like a capitulation type pivot type of thing will come in, and then that becomes a very important low that you can try to trade long off of initially, even though it's counter trend, you're buying it on the way up. And then as long as that a lot of times it's the low of the day in those situations. If it's not the low of the day, you measure what the bounce looks like, and then if that opening low breaks, you got a real problem. That's one scenario that happens. Another scenario that happens is buyers go, oh boy, look at this great gap down. What a gift for me to be able to get stock. And you just see the market immediately get bought up right away. That's obviously the most bullish scenario. The most bearish scenario is actually what happened today. I think it's more bearish for the market to go sideways like it did this morning and then to break down post 10 a.m. Then I think that's more bearish than to actually sell off very heavy and have that panic selling and create a pivot. That's shaking a lot of people out, right? That's like a capitulation type of event, even if it's on a small time frame. So even though it might seem scary and violent to the downside, as there's downside momentum at the beginning of the day, I actually think that is less bearish than when the market digests the gap through time, goes sideways, lets the moving average catch up. This basically becomes a bear flag or a bearish consolidation, however you want to look at it. It's a bear flag with the gap being the flag pole. And that's what happened today. You can see it pretty quick. I remember somebody in the VTF here asked me right after the first bar, like, should we be looking at shorts if the market's going down? I'm like, no, I don't think so. As a matter of fact, this selling here, like on this first bar, this is in that like first scenario that I'm describing where you potentially could be getting panic selling off the open. The market gets even more extended. If anything, that's bringing this market closer to that 415 support that I want to see if it was held at all today. So I'm not nervous or worried about this first bar. It's not making me want to short. And then pretty quickly, it's like, all right, after the second bar here, here's the bounce. And you can really see the bounce when you're looking at the IWM. The IWM was trying to lead this bounce, which was another thing that was getting me excited. The IWM was doing all the right things this morning. It was the spies and the Qs that eventually kind of dragged this down also. You can see the IWM, same thing. First, that big red bar. Bam, here's my pivot. That pivot leads to a new high. I'm like, this is looking great. You know, I have a clear, firm opening low here, and this high is breaking. This is exactly what I want to see. And then you can see the IWM with its relative strength even attempted, though it failed, it even attempted to make a higher low. So you're trying to build out, you know, you got a low and a higher high versus the opening high, and a potential higher low. You know, you're almost going into a 5-minute uptrend here, but there was no confirmation from spies and Qs. Spies also tried to create that pivot, but couldn't break the opening high, and then just kind of went into this consolidation, and then, you know, it just wasn't great. Qs as well. I remember same thing. A couple people commented about it. Qs are trying to make that pivot. They need to break this opening high. It just can't happen. They build out this wedge, kind of goes sideways. This ADMA catches up, and then, you know, a little bit after 10 o'clock, where this ADMA is catching up to the base, the upside base of the flag of the consolidation, that's usually when you're going to start getting lower prices. So, you know, coming into today from a game planning perspective, my thought process was longs. You know, we're already almost down into, this is pre-market, already almost down into the lower end of the support zone that I was really looking at for this market pullback. Like, and it happened so fast. So I'm thinking, all right, like, I'm going to at least get some volatility here this morning. You know, the gap is so big, I could probably get some good opening bounce trades, and then we'll see if that opening low is able to hold or not. And there was still some truth to that. There was actually a couple decent opening drive long trades where we recognized relative strength and stocks that broke their opening high and did really well. I can take a look at a couple of those because I know a bunch of us were involved in them. But once those names broke their lows, once, you know, the market itself was just given this time correction and then broke its low, once you got to, like, really this candle here, I thought was key, this 10:05 candle. So remember, even on the 10 a.m. 5-minute candle, that the market was like still trying to hold this low and still trying to create a pivot. Once we broke this at 10:05, it was a wrap. It was just everything was totally shot. So I went from, you know, trying to really look for my spots and trying to be aggressive in certain spots to the long side in the first 30 minutes to once the 10:05 candle came in and it looks like we're breaking this consolidation to the downside, just kind of being done. I struggled to press the shorts today. I think that pressing shorts today was very difficult. The gap was so big into that support zone. In hindsight, you could have shorted this bear pattern. I didn't like doing that. I don't like shorting, you know, I don't like taking a 5-minute bearish pattern when it's right in front of support as kind of a general rule. But yeah, that was a wrap. And again, you know, there was some really good stuff out there, right? We were talking about XBI in the morning meeting, as this 85 is a really important level, and, you know, sometimes this ETF holds up well and doesn't, you know, trade with the market as much. This opening trade here in XBI was great. We saw the relative strength very quickly. Sounded like a few of us were long. This thing, you know, filled its gap and went green first. It was looking great. And then the market, you know, the market always wins. Doesn't matter how relatively strong, oftentimes it doesn't matter how relatively strong your stock or your sector is. If the market's just, you know, doing this downside grind all day, it doesn't really matter where your relative strength is. Like that XBI was good. I remember I was looking at Snap kind of back through 11. And this one gave a great move here into this equilibrium zone, gave a shooting star up there, which is not great, but it's natural when you bounce into equilibrium. And the thing was trading so strong off the open, I'm like, this is awesome. And then it pulls back a little bit and it looked like it was attempting to make a higher low. But then the market, you know, the market's breaking its lows. I mean, I'm like, actually, and this is one thing that I did notice today, is that I feel like these growth stocks, Snap just happens to be the one that I have up right now, even though Snap's down almost 5% on the day, they're not actually that beaten up today compared to how they usually trade on these big down days. When you have a day where the Qs are down 2.5%, most of the time you're typing up, any one of these growth stocks you can type up, they're down between like 7 and 12%. Just being higher beta and the types of companies they were. But these actually tried to bounce really well. Some of them tried but failed to create higher lows because the market was so weak. And even looking at the snap, it basically held its opening low all day when you know that the market didn't. So I think that might be one little thing to kind of notice with where this market is, but not something I want to overread, just something I'm talking about the opening move. Another one was the SoFi. I was really impressed with how fast the SoFi filled the gap, and then it just dive. Just, totally turned into nothing. Roblox. Look at this opening Roblox move. Green, looking fantastic. I was looking in here to see if it was going to attempt to create a higher low type of pattern into the equilibrium zone if the market could hold up a little bit. Totally failed also. Again, market just eventually caused this thing to fail. So bottom line, it seems like we were focused on the right spots. I didn't even get into the energy and gas names yet. It seems like we were focused on the right spots off the open. Just the market, the way this market traded early on in the day today with this bearish consolidation breaking to the downside, it did not cooperate at all. And, if you took any of those opening trades there, they mainly seem to give enough of a move to get your risk covered if you executed well. So hopefully no one got hurt. And if anything, I would say you put yourself in a really good position to make money to the long side as long as the market didn't die. If this market could have, again, that's my biggest surprise on the day, is how big the gap was into the area that it is, that we really didn't have a single bounce all day today. There's nothing. There's literally nothing all day. We just had that one attempted bounce that was kind of led by the IWM that took place from 9:35 to 9:45, and that was it. That was it. Everything, it just turned into one of those downside grinds. And I remember, when I was kind of coming off the radio and we were seeing this consolidation break down, saying to you guys, this just looks like it might turn into one of those downside grind days, similar to how we've seen just very recently certain upside grind days, right? Where that kind of never-ending bid just came into the market and was, we'd be just grinding up very slowly in those afternoons above the 80 MA. This was the opposite. I think that makes for very hard trading action, really, really in both ways. Gap took away a lot of the opportunity, and then market weakness just didn't help any of those long trades come into play. Energy still held in really well, and we recognized again XLEs is this chart's looking great. XLE was super. So this actually was super volatile today, as opposed to most of the other stuff that I'm talking about. This XLE move, how they sold this thing. And by the way, I don't remember who it was, but great call out from whoever it was in the team that called out this hammer into the VTF at 10 a.m. at lows. What a great call out. Obviously, you don't know if it's going to turn into a reversal or a retracement. It's probably going to be a retracement, but this retracement did turn into a full reversal. And at the end of the day here, this XLE chart still looks fantastic. It did dip intraday below 78. 78, I think, is a key spot, but it closed well above it. So XLE stocks in general are looking real solid. I know we were looking at like an RRC today that kind of worked out okay. I know SWN got brought up in the morning meeting. I'm not sure by who. Unfortunately, this SWN a little tricky with how it broke the kind of opening low here at 10 a.m. If you were somehow able to hold it through this, which I kind of don't see how you'd be able to hold it through it, to be honest. It turned into being a really solid one. And if you got stopped out here, I know at least one or two you did. If you got stopped out here at this opening low and it broke, you just got to recognize that you did the right thing. You 100% did the right thing, and the market just kind of pushed you out. It's really unfortunate. But those energy stocks broadly are still looking really solid. For me, I've done a good job kind of lightening up on my long swings into this up move and very slowly starting to nibble on some, Google and Amazon and things again, but it's really just buying back stock that I already sold at higher prices and kind of trading and keeping the difference. But the ones that, I still got paid well in this 9, I still got paid well in this TEL, Blue Apron, Blue Apron. Somehow the stock is like continuing to be my best name like every day. I liquidated the position though into this move again today. Pretty wild. And that's all I got. So I do have a hard cutoff at 5 o'clock today. Got a doctor's appointment, but happy to answer any questions that anybody has. So let me scroll up in the VTF and see what you guys have. What's Zoom doing after hours? They reported, right? Down, smoked. Not gonna help. Not gonna help growth. I missed on the revenue. I know Pat posted the numbers, but I didn't get to look at them. Oh, there it is. Oh, the revenue guidance is light. That's a problem. That's probably the bigger problem than the small miss they had on the actual rev. Yep, not great. All right, from DJ here. What are some ways you can improve as a trader when you want to stay away from making trades? Particularly something more interactive than just reading books, since that can get boring sometimes. Oh, this is a tough one, DJ. Especially when you're taking away the option that I want to give you to do. So, like I always say, one of the big keys to success in the trading business is knowing when to trade. It's knowing when to be aggressive, knowing when to be less aggressive, knowing when to take a half step back from your trading, and knowing when to absolutely, go after it and be aggressive. And I was actually thinking that today was going to be a more aggressive day, and then the market pretty quickly told me that I was going to be wrong. So, come 10:10 a.m. this morning, I think the market was giving us a signal that this was unfortunately becoming a less is more type of day, because that's not what I thought in the morning meeting today. In the morning meeting, I thought we were going to have a day to be active, a day that was going to have a lot of volatility and movement, and that's not what we got. So the answer that I want to give you is the answer that apparently you don't want. Research, reading books, reading blogs. That was a go-to thing for me for a long time. I know trading blogs are not becoming as much of a thing. Throwing on a podcast. That's where your learning comes from. A couple people mentioned, and I know I did this one day last week when we had a similarly slow day, and I was upset with myself about it. A couple people mentioned that they overtraded today. You gotta find ways to not do that. I do think, and I don't think that the right thing to do, really, maybe once in a while, but usually not, is going to be just to shut down your software and shut down your computer and go do something else with your day. You kind of get out of touch with the market on doing that. And look, sometimes it's good to go catch a breather and take a half step back, but you just had a whole weekend to do that. So, if it's the middle of the day and the market's telling you not to be as active, it really just comes down to researching. That's what you're going to do. Position management and research. And again, that's going to be books and blogs and podcasts and things of that nature. So, apologies if that can get a little bit boring sometimes. I get it, but I don't have a better answer for you that's going to be more exciting. This is nothing more exciting than trading. That's why we want to do it. That's why some of you guys overtraded today. Is because it's exciting. It's what we want to do. We want to be here. We think it's our job to be sitting here pressing buttons all the time, and it's not. Sometimes your job is the exact opposite. Your job is to recognize that you should not be trading. Oh, Pan W is up nicely. Palo Alto Networks on this report, up over 7% here. That's good to see. That'll help a little bit. Such a great company, this Pan W. It's 530 is a nice level. That's good. From my buddy Robert. Yeah, so Oxy was a great trade on Friday. Some people were able to capture that. I mean, really great trade when that Buffett news hit. And it was right at the breakout level, too. So coincided with a perfect technical breakout. And again, I know a few people actually crushed this, which is amazing. And then, we had some news kind of hitting this morning that he isn't or probably isn't actually going to be, buying that whole company out. Like a lot of people have been speculating, which seemed to give it some weakness today. What I was saying in the morning meeting is I think that you just want to be patient on Oxy. If you're already in it from Friday, great, congratulations. If you're not in it, I don't think that you want to chase today after this new news came out that was a little bit negative. 66 is a really important spot. So you could look to be long versus 66 on a pullback today, and today's low was 67.25. It's a lot to pay up. It's a lot to pay up off 66. So you probably weren't able to get stock doing that. But we got an inside day today, and that's what we were looking for in the morning meeting. Was let's take a half step back from Oxy. Let's see how the dust settles on this. Let's see if we get a new setup to come in, and we have an inside day, and that gives us some clarity. So inside day and up is a trade to look at. I would love one more day of rest, one even tighter inside day tomorrow, even though that means that the entire market's probably having a boring day. That ADMA catches up a little bit further, 2 inside days in a row, the pattern tightens up, and then you can really look for that next trade. I know I was chatting with Stefan about it. He's heavy, from my understanding, or at least he told me it was on Friday. So he thinks it's still super cheap, and he thinks that Buffett's going to keep buying. That's his thought process, but we'll see. What trading podcast do I like best? So Alex mentioned Chat with Traders is great. I listen to that one occasionally. It's on my kind of backup list, I guess I would call it. Not one that I listen to every single episode of, but one that I listen to occasionally. Listen to Animal Spirits, which is the data that they provide in there. I like. I watched that Josh Brown YouTube one. I forget the name of it right now off the top of my head. What are your thoughts? I watched that. I listen to the Pivot podcast, even though I don't really like Kara Swisher that much. I like, what's his name? Scott Galloway. I like his take on a lot of, when he talks stocks. My problem with that podcast is they get into politics a little bit more than I would like. But I like when they're getting into stocks. I like Galloway's take on certain things. And that Trading Justice podcast that Richard here just mentioned, which I was a guest on. If you guys didn't get to listen to that episode, it's probably a couple months ago now. But I like that Trading Justice podcast. I like how well they know their trading history in that podcast, and how well they can talk about and compare to other times in market history. So definitely recommend that Trading Justice podcast, which again I got to be a guest on, which was how I learned about it originally. And I remember I was looking for a new podcast to kind of add to my list, and I was invited on a few podcasts. I did a few, and to be honest, I wouldn't necessarily recommend listening to every episode of all of them, though you should listen to the one that I did. But the Trading Justice podcast, when I heard that, I was like, oh, this is great. I would actually be like a consistent consistent listener of this one. So we definitely recommend checking that out. Bill K is saying Top Traders Unplugged. I haven't heard of that one myself, so maybe I'll check that one out also. So yep, hope that helps you with some recommendations. I mean, that's a lot of listening right there, just with those recommendations. From Austin, my money management rules are really challenging me right now. Friday, I had my max loss, and I stopped trading as I watched Oxy rip, and it was on my radar from the morning. Learning when to go hard and when to lay off is very challenging for me. No question, just a comment. Yeah, so the only thing I would add on to what you said here, first, I would reinforce to you that money management is the most important thing. As a rule, it is going to be better. I'm just going to make up some numbers, simple numbers. Let's say that your maximum loss is $500. It is better to sit there down $500 and not trade and watch every single trade work to the point where you would have made back all your money and a lot more. It is actually better for you in the long run to sit on your hands, eat that $500 loss, than turn that $500 loss into a $1,000 day. I know that sounds crazy, but it's never about, this business is not about one day, or it's a marathon, it's not a sprint. So it's better for you to consistently follow your money management rules. Because if you can't follow your money management rules, it's going to be way more often that you're down. Again, we're just saying your maximum loss is $500 to keep it simple. It's going to be way more often that your down $500 day becomes a down $1,000 day, $1,200 day, $1,500 day, then your down $500 day becomes $1,000 day. Now, the one exception to that, one exception that I make is in an A plus trade. If a rare opportunity, because it should be very rare, should almost never even happen, where you're sitting there and you're locked out, and this rare A plus trade comes along, where the stars and the moon are all lined up for you. That's a trade you want to take no matter what. Was Oxy an A plus trade through 66 on Friday? It was probably close. It's already shown relative strength. The one thing I didn't really like about it was the time of day, but it was negated by the news as it was hitting through the breakout level. And it was a really big spot. So I don't think I would have faulted you if you took Oxy at your max loss if you're considering that to be like an A type trade. But you got to be very careful. It's a very slippery slope that traders need to avoid, where they continue to trade after their max loss. And again, the type of opportunity that Oxy presented on Friday, it's going to be pretty rare that it lines up that perfectly. Where that's that rare situation where you do it. But otherwise, I can tell you, I've just reviewed and seen hundreds of accounts and trading and months after months after months of people's trading accounts and mine. You've got to. Thanks, Josh. You got to be able to take a step back. Jackie saying, "Can you take a look at Baba?" Stock. Oh yeah, for sure. These Chinese stocks are showing really good relative strength early on, but is it still a bear flag on the daily chart? It's not a bear flag. It's a bearish wedge. It's a little bit different than a bear flag. Basically support with, you have equal lows and lower highs that have been coming into it. So if this thing really starts breaking below like $89 or so, the area is a little bit loose, probably like 88 quarter to $89, and your pattern's trying to break to the downside. So what you're potentially talking about here is two competing things. You got relative strength on the one hand, and you've got a bearish pattern on the other. To me, that means maybe look for a different Chinese stock, because all the other Chinese stocks are showing relative strength also, and maybe you could find one to focus on that was not also showing you a bearish daily chart. Yeah. The problem is most of these Chinese charts are sloppy. Like this JD's not terrible off the $54 support, but certainly can't make an argument that it's a great looking chart either. PDD, kind of same situation. Relative strength, it's not a terrible looking chart with that 44 support, but you definitely can't make an argument that it's a really appealing chart either. I think it's back below 52. They'll start looking good. Baidu, same thing. Not great looking. I don't like a Neo or an XPEV. None of these Chinese daily charts are looking good right now. Okay, so but that would be my first thought process, is try to find one that's got a better looking daily chart than Baba if you're trying to just trade the relative strength. Now that I've just kind of gone through them, I'm not really seeing too much of that. So then you're dealing with a potential trade where you've got layers of probability on both sides. It's a layer of probability against being long that it has a bearish daily chart pattern. It's a layer of probability that is for being long that it's showing relative strength. And you have to balance out the fact that they weigh each other out a little bit and recognize that any trade that you find in it's probably not going to be an A plus trade because of that bearishness. PDD was showing a lot more relative strength today than the others. PDD this break was really nice. Yeah, tomorrow is my birthday. Probably more importantly than that, tomorrow is my 12-year anniversary at T3. I started at T3, and that's how I am able to know that it's my anniversary at T3 on my birthday 12 years ago tomorrow. Then it's saying covering your risk quickly, basically getting those one-to-one kicks has really made a big difference for him. It's great. Love to hear it. All right, gang. Looks like we got through the questions. I'm gonna just end it here because, like I said, I got a doctor's appointment that I gotta jump over to. It was a slower day today. Disappointing day, in my opinion. I felt like pre-market, I thought that this day had a lot of opportunity, and very quickly it showed us that it was going to be a boring type day. So, hope everybody navigated it well. You know, if you took those opening trades, I hope you're able to get your risk covered. Or, again, there was still a few good things in some of those energy stocks that were some good call outs that I hope some people were able to capture. Or at a very minimum, if today was a tricky day for you, which it easily could have been because of the price action, that you followed what I say at the end of every morning meeting every day, which is to focus on your risk management. It's the most important thing. You gotta have good risk management on tricky days. Can't get sloppy on these types of days. You gotta preserve your capital. So that's it. Have a great night, everybody. See you tomorrow.